New Holdings is expected to report quarterly financial results and investors are curious if they should buy this financial services stock before the company reports quarterly earnings results. I'll answer that question in this video. Also, I will preview what investors can expect from this company when it reports its next quarterly results and what numbers to look out for outside of those widely publicized headline numbers like revenue and earnings per share. I'll share with you the critical metrics to look for when evaluating New Holdings stock. Let's take a look. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so before I get into the update, I wanted to provide you my recommendation for New Holdings. I've had it rated as a borderline buy, and I last updated that on June 5th. I've had New Holdings stock rated as a buy for a couple of years now, and correct me if I'm wrong, but I believe in 2023, I had New Holdings on my list of top stocks to buy, and then because the price increased so much, I took it off the list here in 2024 while keeping the stock rated as a buy. If you've been following this company for the last couple of years, you'll know that the valuation has improved, or I should say the valuation has gotten more expensive in recent months. And when I say the valuation has gotten expensive, I'm not just talking about the market price. I'm talking about the forward price to earnings ratio. This is the metric that informs me whether or not a stock is getting expensive or getting cheap. It's the valuation. It's the price compared to what I'm getting in return. It's not just the price. If I just look at the price, I don't know if it's expensive or not. I need to compare the price with what I'm getting. And so when I compare the price with the earnings per share expectations, you can see New Holdings is trading at nearly the most expensive valuation it's been trading for in the last year. It's trading at a forward PE of 24. And you can see that's about the highest it's been going back 1 year. So now let's take a look at what's been going on here and what to expect from New in its upcoming earnings release. So one thing that they've been doing very successfully is adding new customers. In the most recent quarter, they added 5.2 million new customers and 21 million year over year. And now they have a total of 104.5 million customers at quarter end. Now, financial services companies like New Holdings, they benefit from economies in scale, and growing to this larger magnitude will certainly help the company serve these customers more profitably and spread out the fixed cost across a wider customer base. They're now the fourth largest financial institution in Latin America when counting by the number of customers. But in Brazil, New has already become the largest institution when looking at the number of active customers in credit operations. And in Latin America, Brazil is, in my opinion, one of the most attractive markets within that region. It's got one of the best rates of increase in economic activity and one of the lowest rates of volatility and geopolitical risks in that region as well. So not only are they growing customers, but what I've liked about New Holdings for a couple of years now is that they're growing customers profitably. They're focused on profitable growth. And in their latest quarter, net income increased to 487 million. That was up by more than double from the second quarter of 2023, when net income was about 225 million. So they're adding millions of new customers, over 20 million customers year over year, while also increasing the bottom line profitability by more than 2x. I love to see this from businesses. Not only are they adding new customers, but adding these customers profitably. They're not chasing growth. They're not overspending for growth. That's true organic growth, in my opinion, is when you can grow the business profitably. That's an organic growth business. Other businesses, they grow, but at the expense of the bottom line. They lose so much money on the bottom line chasing after growth. I question whether or not it's worth going after that growth when it's coming at such an expensive cost to the business overall. All right, so here are two key metrics for New Holdings stock investors and those that are interested in this stock. These are two critical metrics to look for every quarter when the company updates their financial results. And the first I'll talk about is the NPL ratio. And these are the losses, the amount of people that are not paying back their debt. And for the 15 to 90 day NPL ratio for their Brazil consumer credit portfolio decreased to 4.5% this quarter, but the 90-day plus NPL ratio increased to 7%. So a bit of good news, a bit of bad news. And the 15 to 90-day decreasing suggests that going forward, their credit portfolio will perform better. Now, this was a big concern from investors, including myself, over the last 4 to 6 quarters, was that there was fears of an economic recession, a worldwide economic recession, given the rising rates of inflation worldwide and given the increases in interest rates implemented by central banks worldwide and how that would impact consumer credit portfolio. Will people that lost their jobs continue paying their loans? And thankfully, we haven't had to answer that question because it doesn't look like we're going to be heading into a recession. It looks like central banks worldwide have orchestrated a solid control of inflation while also maintaining economic growth. That so-called soft landing looks to be more and more a likelihood now, with several central banks now starting to decrease interest rates because inflation has come down by so much that now central banks feel comfortable about decreasing interest rates. Now, I've heard some talk about why central banks are decreasing interest rates when economic activity is still so strong, unemployment is still so low. And that has to do with something called the real interest rate. And when you compare the central bank's nominal interest rate to the inflation rate, if the central bank's nominal interest rate stays the same, but inflation comes down, the difference between the nominal and the inflation rate expands, which creates more contractionary forces in the economy. And so when inflation is coming down, the central bank decreasing interest rates just to keep the real interest rate where it was before. So they're not necessarily trying to expand economic activity, but what they are trying to do is reduce the restrictiveness of their interest rates. I'll have a lot more to say about that in future videos. I just wanted to start touching on that here, given how new holdings is correlated to interest rates worldwide. Maybe not U.S. interest rates, but the U.S. economy is so important to worldwide economies, especially to an economy like Brazil, which is dependent on commodities and exports of commodities. And so the performance of the larger developed economies like the U.S. helps growth in Brazil significantly. The next critical metric to look for when new holdings reports is the risk-adjusted NIM. And this stands for the net interest margin. And risk-adjusted is adjusting their net interest margin based on the risk that they're taking in the lending. Net interest margin is the difference between how much new holdings has to pay for the money that it gets, whether it be consumer deposits or otherwise, and then how much they charge people for the loans that they give out. So in a financial services company like New Holdings, you want to see a wide spread. And 11% is good, but what's even better is that it's expanding. It reflects a 300 basis point expansion from a year ago and 150 basis point expansion quarter over quarter. When you see the results, you want to see this metric continue expanding. You want to see the company's net interest margin expanding if it can. It's difficult to continue expanding indefinitely, but it can continue expanding at least in the near term. All right, so those are the big picture items to look out for from New Holdings when it updates its quarterly financial results. Now, to answer the question, should you buy New Holdings stock ahead of the earnings release, or should you wait until after earnings to purchase the stock? Typically, what I advise in most cases is to wait until after earnings release or to split your purchase in half buy half before the earnings and half after earnings, unless I see a significant under or overvaluation with the stock. With new holdings, I don't see a significant under or overvaluation. Now, a couple of companies that I did see that recently is with Tesla, where I saw a significant overvaluation, and with Fiverr International, where I saw a significant undervaluation. So my recommendation for those two businesses deviated from my typical general recommendation to reduce risk by waiting until after earnings to purchase a stock. That way you have all the latest information and you can digest that information and then make the purchase. That's what I would recommend here with new holdings. While I do have the stock rated as a buy, if you're considering investing in this company, I think it would be most prudent to wait for the earnings to come out, digest the new information, and then make the purchase. Or if you want to reduce your risk of missing out, split your purchase in half and buy half before earnings and half after earnings. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.